Our guest is Dr. Marc Faber here in Vancouver. Tom Jeffries and HowStreet.com's video channel here on YouTube. This is part 2 of our interview, and we're doing this May 8th, 2009. If you hear some noise in the background, it's a beautiful cruise ship, so we apologize. Let's get back to where people are. Let's talk about bonds, corporate bonds.
Yes.
A lot of people are getting a little worried about that prop under the market. What say you?
Well, I mean, the corporate bond market essentially bottomed out already in October. And then since January of this year, we had a very powerful rally in corporate bonds and also in high yield bonds, in junk bonds. And I mean, you know, there is a very fragmented market, and there are different companies, and some companies will survive and not default and others will default, like also sovereign credit, some will default and others won't. And overall, I would say there's still an opportunity in corporate bonds, but now the grave is out. It's like if you buy the S&P today, the easy move, 666 to 929, that's over. From here onwards, the rise in stocks will be more selective because we were very oversold. Now we're no longer oversold. Short-term wise, we're overbought.
You've warned in your columns and every interview I've seen for the last couple of years that we're heading towards a situation where, because of demographics, a lot of people that are supposedly going to retire are going to find out their 401ks have been routed, their savings. What happens to the baby boomers as they head to the retirement, Doctor? Well,
I mean, that's another problem in the sense that the deposit rate is zero. So if someone was a decent fellow in the world and had a lot of deposits in banks or in treasury bills, now is not getting compensated. That's basically a theft by the Federal Reserve and the US Treasury of honest people, and it forces actually people to speculate. Like if I don't get any return on my deposits, then I'm more likely to do something with the money, and that is to speculate in either shares, commodities, or real estate, and so forth. So it's actually the Fed that is encouraging a lot of speculation. And that's why we have this rise in asset markets at the present time.
Well, are you surprised what happened at the rapidity of literally whole countries going over the falls? Iceland with their leverage, complete insanity, Hungary, etc. Were you surprised at the speed, Doctor?
Not really. I mean, these credit cycles, they have a tendency to build up over a number of years. Like in the US, debt to GDP increased from 130% in 1980 to now 370%. At some stage it doesn't work anymore, and then there's a credit contraction and lending standards are tightened and people become risk averse, and so suddenly you have this slowdown in credit growth or a collapse in credit growth in this situation. And then you have the government coming in with their fiscal deficits and the printing of money, and so you're like in warfare. The private sector takes money away, takes credit away, and the government flushes the system with liquidity. That creates these huge volatilities.
Right. Let's talk about gold. I'd be shot if I didn't bring that up here at HowStreet.com. Where are we in the gold market? So hovering, it seems the ceiling's around 1,000 right now.
Well, as you know, gold has rallied between 1999 from $251 an ounce to recently over $1,000 an ounce. It touched 1,000 twice last year and this year. Now we're around at the 915 level. I think that in an environment where equities and bonds perform very badly like last year, gold performs well because it's a flight to safety, and people begin to recognize gold as the ultimate cash where the supply cannot be increased, whereas any paper currency you can just print as much as you like, electronically of course. But in an environment where, like since March, markets rise very sharply and the risk appetite increases again with the garbage stocks outperforming anything else, in that environment gold doesn't perform very well and goes to sleep. And I think it may not go down a lot, but I would rather think that gold will correct further on the downside and eventually provide a very good buying opportunity. I don't know, between say June to August of 2009 from a lower level. But I didn't sell my physical gold because I don't trust central banks. I want to be my own central bank. My only worry is that the central bankers and governments that have now proven how dishonest they are, that they will take your gold away one day.
1/6 of the world's population are going to bed tonight hungry. We're seeing water around the world depleted at an alarming rate. Let's talk about investment opportunities in the commodity side.
I'm also going to bed hungry because I'm on a diet.
Oh, well, that's good. So am I. No, but seriously, 1 in 6 hungry. What's happening in food commodities? The prices, some of them are languishing, and it doesn't make sense to me.
Yeah, well, the food, there is enough food in the world. It's a distribution problem, and it's the ability of people to pay for the food.
Right, bottom line.
But the tragedy is, of course, that the world has plenty of money to build a total waste, an arsenal of weapons to fight each other, to kill each other, but they don't have the money to distribute the food equally and to essentially get rid of starvation for lots of less privileged people around the world. It's a tragedy.
I won't say anything about the Trade and Convention Centers right behind us. That was at $900 million and counting. No politics.
Well, I think it's a good deal, $900 million. I've seen worse.
Okay.
I've seen much worse.
Okay.
But, and also this makes sense because the convention business is a huge business.
Right.
If you don't have great facilities, you don't get the conventions. And so for the city as a whole, even if it was $900 million, it may be $1 billion, it doesn't matter. It's an asset that enhances the value of Vancouver, which is incidentally, as you know, one of the most desirable cities in the world.
Boy, now I feel a lot better when I write another check every couple of months to British Columbia's government. Let's not give away the farm freely, but what are you looking at to invest in? What sector? Where are you looking to perhaps make money going forward?
Well, actually, today and yesterday, I began to hedge some of my long positions in equities because I think we had this huge rise and maybe there's going to be a correction. But I think a lot of mining stocks are still very, very inexpensive. And a lot of stocks, they had base building patterns starting last November until about 10 days, 2 weeks ago. And then suddenly with huge volume, they started to go up. And I think there are lots of stocks that still have some potential on the upside. But I'm only saying that as an index, I think the indices are now overbought and now you have to be a little bit more selective. But I still like a lot of resource stocks. I think natural gas is inexpensive. And I would start to nibble at real estate around the world, especially in Asia.
I'm just about to sell my condo. I feel really good about this right now. Thank you very much, Dr.
Well,
Faber.
the condo, that depends on the supply situation in your individual market. But in general, the condo market has come off, say 30-40%, depending on the city in the world. And at this level, if it's in a good building, maybe you should keep it for a simple reason that the governments will print money. And you may argue, well, the economy will be a disaster. Yes, the economy will be a disaster, but the worse the economy is, the more money they will print. Mm-hmm. That's the problem.
The thing that worries me, though, right now, it depends on how wealthy you are right now. There's some people, it's already a depression. For some middle class, their wealth hasn't gone up because their wages are stagnant. It seems the top tier is doing well. But Mr. Obama, as we speak, is changing the tax code. What's going to happen in America?
Well, I think Mr. Obama is a total disaster, personally. I think the US has really had bad luck. First Bush and now Obama. And I think Bush, normally 2 and 2 makes 4. Bush and Obama makes 0, equals 0.
This is what we need from economics in our universities. Dr. Marc Faber is our guest today at HowStreet.com. Dr. Faber, good to see you. And thanks for your time.
Thank you. My pleasure.
Tom Jeffries for HowStreet. Thanks for watching here on YouTube.
Comments made on HowStreet Video and HowStreet.com are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at HowStreet.com. HowStreet Video is a production of HowStreet Media Incorporated.